Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's March 14th. I'm Marin Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Okay, guys, fair warning. I know the market's coming down. I know you've seen Larry cover unbelievably, right? Going to be part of the Trump administration. I don't know if that's good or bad yet. I haven't really analyzed it. You've seen the tariff thing, crazy, and trying to find the winners and losers, all these potential measures being taken by a president. So I'm going to have the most educational of educational segments later in the show. I also put together a sensational interview with the all-time favorite guest, someone who always tells it as it is. It's exactly what's on his mind. And more important, which I know you love, always shares his favorite stock ideas. But before we get to all of that, and I want to hear it from the non-sport people out there, don't send me the emails. I'm not going to read them. I don't care. March Madness is here. And every year we do the brackets, and we're going to start off with that. It's not going to be a whole time thing. But the fair warning is, if you don't like sports, which is some people, you can fast forward right to the interview. Please do not delete the podcast because I'm going to come out with an amazing segment. I promise. I mean, it's going to be fantastic. But college basketball is my favorite sport. I've done all the homework this year. Plenty of sleepers. Going to give you my 4 teams. Definitely going to make the Final Four. And, of course, I'm going to reveal the team that, without a doubt, will cut down the nets in San Antonio on April 2nd. So, again, if you hate basketball, just fast forward to the interview. And definitely, guys, I'm not kidding here, listen to the educational segment, because you're going to know more about tariffs than 99.7% of the people in America, including most politicians, economists, and even trade experts. I'm not kidding. I've done a ton of work on this to help you out and understand exactly what's going on, because nothing that I'm reading, and most of these people do not get it. And it's unfortunately when you're reading the wrong things, I have the wrong opinion, and I spent a lot of time on this. It's going to be really, really cool. But let's begin with my bracket. Let's start with the South. And who do we have? Well, we have Virginia. Watch Virginia play a lot this year, but be careful. Not that they're not a great team. I love them, fundamentally good. It's just a team. It's not one guy that does it for them. But if you have them winning the whole thing, you fill out your bracket, be very careful. I'm going to give you an interesting stat that you definitely should know. So in the ACC, right, division that they're in, there have only been 3 times in history, dating back to like the 1950s or the 40s, whenever this started, 3 teams in this division where they won the regular season title, then the conference championship, right? They did both of those, and then went on to win the NCAA championship. So last time it happened, 1991, I believe. Maybe it was 92. I think it was 91, and that's when Duke won the title. So we're talking about 25 years ago. So if you have Virginia winning the whole thing, just think about that. It doesn't happen often. When you win the regular season championship, when you win your conference championship, what they just played, to beat North Carolina, and then you go on to an NCAA championship, it almost never, ever, ever happens. So be very careful. Not that they're in the worst bracket, second easiest in my opinion. Watch out for one of my sleepers here, Kansas State. Their 2 best players were hurt when they lost the conference championship to Kansas. I've seen this team play a lot. They're very, very, very good. They should have beat Kansas 2 times this year. And they just, didn't play well down the stretch. An awesome team. I actually think they're an underdog against Creighton in the first round. If they win, they're going to play Virginia, and they match up real well to Virginia. So you heard it here first. I'm not saying that's going to happen, but it's interesting. I mean, they have the shot to beat them as long as they get past Creighton. But that's one of my sleepers. Kentucky's also in this bracket, who looks great right now. Tennessee, I'm not impressed with because they just can't be consistent. I don't know which Tennessee is going to show up. Cincinnati, amazing defense. Unbelievable. They're a team that don't ever watch play because you'll fall asleep unless you like basketball. I love basketball. That's why I watch them. However, when it comes to the tournament, you don't see these crazy great defensive teams win. Almost ever. Even when Kentucky beat Kansas a long time ago, Davis was just swatting every day. He couldn't really hit it. Their offense was still picking it up, and they would hit it. It's usually 3-pointers, and you have to have that offense coupled with defense. But you see the teams that win, their offense gets hot. The offense gets really hot. So it's not some team that shuts everybody down and play. You don't really see that happen. How many defensive teams we've seen? I mean, hundreds of them over the past 15 years that they're like, wow, these are the best. If your whole entire team is really based on defense, like West Virginia is another team I would be careful of. You need that offense, and maybe they click and that offense kicks in. That's fine. But I don't see Cincinnati. great team. I'm not putting them down. I'm just talking about a team that could, really go all the way and make the Final Four. You also have Arizona, which is a huge wild card. I mean, they look great right now, but I've seen them play a lot this year. In some of those games, they looked absolutely horrible. But they are hot right now. And after all the BS and the FBI investigation, they're playing with an edge. I get it. But I don't think that edge is going to be good enough. I really don't. I mean, it's going to be tough to get by, I don't even see them getting by Kentucky. I think Kentucky matches up really well with Arizona. I know it's crazy, and I can't believe it's a top half of the bracket, guy. You have Kentucky, Arizona, and Virginia. It's pretty incredible. That's just the top half of one event. Not even the full bracket right there. But I think it's going to be Kentucky that beats Arizona, and you can see Kentucky play Virginia. That's all I have. And Virginia, and I'm going to cover every team. I'm going to do this pretty quickly for you guys. And then I see Virginia getting to the Final Eight, and they're going to play Cincinnati. Okay, I'm not crazy about Tennessee. I think Miami advances. It might be Tennessee. It might be Miami against Cincinnati. And again, like Cincinnati, they're a good team, but you will see Virginia go to the Final Four. In the East, Villanova can play 4 of its guys and walk backwards into the Final Four. That's how easy that division is. I don't see West Virginia. I don't see Wichita State as a threat, although Wichita State could get very, very hot offensively. The defense is terrible, but they're maybe a good first-round pick if against the spread. I mean, these guys can light up. They could probably score 100. They're fantastic. They just don't really play defense, but they can get hot. My sleeper here in this division is Texas Tech. I don't know if that's so much of a sleeper because they're a 3 seed. However, they were capable of being a 1 seed before one of their best players got hurt. In fact, Kansas won, because I'm a Kansas fan, as you know, won the Big 12 title for the 14th straight year. Unbelievable record, best thing ever, awesome. Who cares? Because they only got 1 championship over that whole entire time. I'd rather they won 3 championships and maybe 5 conference championships. That's as a Kansas fan. Texas Tech would have won that division if their best player did not get hurt. And he's awesome. His name is Keenan Evans. Got hurt like the last 4 games. And this is a team that was, in the top 6, I believe. They might have been ranked as high as 4. Fantastic defensively, offensively. They went to Kansas. They beat the crap out of Kansas. The game was even close. But once that guy got hurt, and now they're saying he's healthy and ready to go. If he is, it's just a team to look out for. I think Florida, Purdue lose early in the bracket, but Villanova just has too much firepower. I think Villanova easily walks out of this. Maybe Texas Tech, but I'm just not too sure. Evans is healthy. In the West, we have Xavier as a number 1 seed. Very tough road for them. Missouri just got their best player back. They're going to have to play them pretty soon. This is the next round, which is kind of like a very, very tough game. Michael Porter Jr., I have a feeling he's going to play well back. You can tell he's a little, rusty. He went down real early in the year, but this is a guy that's projected to be a lottery pick, at least before he went down. He's a great player. I'm sure he's been going crazy, showing the world. Everybody's going to be watching him. If he plays great, he could go to the NBA. I don't think, but still, that's going to be a tough matchup. I'm not saying they're going to lose. Gonzaga is a team to watch out for. Very tough. I expect them to make the Elite 8. Michigan is a wild card. Michigan was off everyone's radar until they just won their conference championship. They got rewarded by being put in the toughest bracket. Good for them. So you don't know what you're going to get out of Michigan. They look really good, though. They kill everybody in the tournament. And then you have North Carolina, who is hot right now, but played terrible in the conference championship against Virginia. Virginia beats crap at them again. I have UNC going to the Elite 8 and beating Gonzaga. Beating Gonzaga, guys. Okay? Beating Gonzaga to make the Final Four. So that's going to be an interesting bracket. I don't think Xavier just be careful with Gonzaga. No one's really talking about Gonzaga. Gonzaga could be a really big sleeper. They actually could beat UNC. It's just, sneaking out on everybody. Last year, they had a much better team. I think they lost to North Carolina. It was a very good game. And, we know what happened when North Carolina wanted to win. But if you're looking at Gonzaga, I don't like to say a 4 team's a sleeper, but they could be. But I think they're going to beat Xavier in that bracket and really come out. But I do have UNC, which is too much firepower there. Getting to the Midwest, of course, we have my Kansas team, number 1 seed. Guys, be careful. They have a really tough matchup against Penn. Don't laugh. It's a 16 seed. Don't laugh. Because Penn is the 2nd highest ranked 16 seed ever, right? In tournament history, right? But you didn't know that. But the one thing Penn is great at, really, really great at, is they guard against the 3. They're one of the best teams in the nation. And KU, that's their bread and butter this year because they don't have a strong front court. They don't have big men. One of the big men just got hurt. I believe he's playing, which is a fantastic player, but they still won the conference tournament without them. And I think that's important because they know they could shoot threes and go crazy, and they were hot, and that's good. But I've seen Kansas play a lot this year, and I've seen them when they're cold, and they can lose to anybody. They lost to Oklahoma State twice. No idea how Oklahoma State's not in this tournament. They beat Texas Tech, West Virginia. Just if you compare them to Oklahoma, it's not even, it's a joke. And I know why. Oklahoma is one of the best players in the world, and he's great. However, the fact that Oklahoma State's not in this is crazy. Now, moving on here. KU does make the Elite Eight. That's what I have. Bottom half of the bracket. Holy cow. Duke, Michigan State, staring at each other, right in face. Matchup coming in. I mean, Rhode Island's a good team in the mix, but they're very small. They're just going to have bad matchups against Duke and Michigan State, I think. I think they're going to just run over them. I have Michigan State beating Duke and Michigan State then beating Kansas. I think Michigan State's a very, very good team. I think they have too much firepower for Kansas and much better. And I think we see Michigan State go to the Final Four. So what do we have? Virginia, Villanova, UNC, and Michigan as my Final Four. Not too much. Two number one seeds there. And then let's keep going here. Again, almost finished for your non-sport enthusiasts there. I got to cover this. I cover it every year in detail. I get tons of emails. That sets up a rematch between Virginia and North Carolina. Remember, they played in the conference final a couple days ago, maybe less than a week ago. I think North Carolina's going to win that game. I don't see them losing to Virginia again, and I watched that whole game. They played terrible. They really didn't play good in the whole tournament. They played really good against Duke, pretty much in that second half. And they didn't play good. They just kept winning, and then they didn't really bring it with Virginia. It was just a stretch that they looked really bad. I like North Carolina. I don't see them losing again to Virginia. I really don't. I got North Carolina winning that game. I mean, much more motivated. Plus, Virginia not used to the big stage. I mean, that coach he's proven. If you look in the past, Virginia's an easy out. I haven't seen Virginia actually exceed expectations in a tournament. Like, I don't think ever. They always got. They used to be the Villanovas, right? And they used to be like Villanova. So it's interesting. So I really haven't seen that, and I'd like to see how he is on the big stage. When North Carolina's been there, done that. Got to factor that in too. On the other side, we have Villanova against Michigan State. Villanova is an awesome team, but I just don't think Jay Wright's a big game coach. I mean, I know you say, well, he won the championship. It was amazing. He almost lost every big game he've ever played in up to that, except for that NCAA tournament. You say, well, that's a big except. However, he almost blew that game. I mean, the way he coached that game at the end, they were up by 9 with a couple minutes to go, and they're basically going to overtime, and he got bailed out with probably the greatest shot to end the NCAA championship ever, and it went in. It was great. If they go to overtime, Villanova's going to get crushed that game. I mean, being up, everyone celebrate. You think you're going to win, and the other team just, comes back and ties it. I mean, I bring that back to what was it, Memphis against Kansas. I mean, Memphis, all they had to do was hit a foul shot. Was it Rose? I think it was Rose. He missed 3 foul shots at the end of that game. They came down, hit a crazy 3, Chalmers, and then went to overtime. You knew the game was over, right? It was just you're down. You knew that game was over. Kansas won, championship. I think Villanova's going to have a tough time. I really do. I mean, they don't really play that good. I've seen it in those big games. I don't know. I'm not too crazy about it. So when I see Villanova there, I don't know. Villanova's going to be really, really tough. I really do. I think Villanova is not going to make the championship game. I think they're really, really good. I think it's a cakewalk for them. I love the team, but again, I'm a little worried just with Jay Wright. It should be very interesting on that end of the bracket. See, I think Villanova will have trouble, and I think Michigan State is going to beat Villanova to make the championship. So we have UNC against Michigan State, and I have UNC winning it all. North Carolina's a great team. I mentioned they haven't played the best game yet. They know how to win. I saw every game in that conference championship. They really weren't playing good, and they have massive, massive potential. I don't see a lot of weaknesses. They can defend. They can rebound. They can shoot the 3. I see UNC winning a championship in San Antonio, cutting those nets down, and celebrating another championship. Now, when it comes to NCAA, don't do the opposite of what I do here like you do in the Super Bowl. Even though I was right with the Eagles for the first time ever. Not first time, for pretty much 8 Super Bowls. I wouldn't do the opposite here. I follow basketball religiously. I played for over 35 years. It was my life. I watched tons of games. I love watching all kinds of college games, even when the good teams aren't playing. Doesn't mean I'm going to be right, but I've usually done pretty well with my brackets in the past. So I always revisit them, make fun of them, want to hear your brackets. But seriously, I literally get hundreds of emails on this. It doesn't pertain to anybody. The whole podcast is not going to be. It is an investor podcast here. But one last note, because I know you guys love this as well, the sleepers. I have Rhode Island, possibility. They're in a tough bracket. But I think Rhode Island has the potential to win. Those are just guard-oriented team, small, but they can light it up, and they're very fast. Kansas State's my biggest sleeper. Houston's also another sleeper. And Gonzaga, not that the number 4 seed's a sleeper, but not too many people have them going to the Final Four. And they have a shot. They really do. And a few people are talking about them, and I think they really, really do have a shot because no one's really talking about, say, UNC, Michigan, Xavier in the bracket. But I like Gonzaga. They've been playing well. No one's really talking about them. Sometimes, that's a motivational thing. So we'll see how they do. So that's my March Madness prediction. When my team makes the Final Four, North Carolina wins it. Just be sure to get my name right on the check you send me. So I'm charging 20% for all the profits you make and a 2% fee just for knowing me. That's my new Curzio hedge fund structure. So just to let you know. So now, moving on here. And thanks for all the, again, non-basketball people out there who have been patient. I have a great interview set up. My buddy Marin Katusa, who's a founder of Katusa Research, the best analyst in the resource sector, the best performing funds in the industry over the past 5 years. It's not going to be a typical interview. We are going to touch up on gold and see where it's going and stuff, and then, it's normal. But we're going to get to another commodity that nobody's really talking about. And it's up huge over the past 6 months, yet the underlying stocks in that sector have pretty much lagged. Marin thinks that's about to change. Marin's break down those fundamentals of the sector and share his favorite ideas that are going to benefit from that trend. And he's also going to share another small cap idea with you, a name I'm sure most of you never heard of. That's a junior miner, trading an exceptionally low valuation. But enough of this build up, which I like to do. Let's hear from the man himself, Marin Katusa. Marin Katusa, thanks so much for joining us on Wall Street Unplugged, buddy.
Oh, it's a pleasure.
Well, I know you've been busy traveling, going to conferences. I recently attended a conference with you in January. I think another one in November. Always on the road, so I really appreciate you coming on, and so do my listeners. And I wanted to start with the overall resource market because we're going to get to a lot of interesting things here, guys. You have actually been a bear on gold and gold stocks for a pretty long time. And I had kind of a different stance saying, it's coming. And, you've kind of been bearish. And you did invest in several names, but I know your portfolio is small. You've been very selective. What's your take on gold stocks? And is it finally time to invest in this horrible sector since we're finally seeing a few macro catalysts, right, that haven't existed for a long time, like rising rates and rising inflation?
I think you kind of let's break it up from the actual gold metal. When you look, part of my thesis of why I've been so conservative and very picky on my equity investments is if 5 years ago you woke up from you went into a coma 5 years ago and you looked at the newspaper, you said Trump was president, look what's going on with Russia, look what's going on in the Middle East, look what's going on with the EU, look what's going on with China. And when you got to the price of gold, you would have probably guessed it was $5,000 an ounce. And yet here we are barely holding 1,300 and change. And that's kind of a good take of where we are. And now let's go to the equities. There's a lot of competition for the traditional speculation in trying to build a gold mine or trying to find a gold mine. And that's the marijuana stocks, and that's the cryptos and the Bitcoin and the blockchain companies. It's really grabbed a lot of the speculation. So from about a year ago, I started telling people and publishing, hey, there's a lot different aspects. But you see, Frank, for guys like you and I who've been around for a couple of decades, that is, where I have a strategic advantage because I know my sector well. I know most of the guys, almost all the key players in the industry. And if you pick right and sit tight, you're going to do very, very well. However, for the momentum traders who are looking for, 10 baggers in 30 days, this is not the sector right now for it. It'll come back to that. And I think it's going to be a couple of years before the big momentum, the big money gets back into the resources from the mid-tiers. I was just at the BMO conference, which is an invite only. It's probably the best institutional conference for mining in the world. And literally I was talking to some of the biggest fund managers in the world, and they're kind of worried about their own jobs. They were talking about, hey, you wrote a book. How did you do that? We're thinking about doing that. And I'm like, why would you think about writing a book? You run one of the biggest funds in the world in the sector. And they're going, look, we're down 40%. And our high water marks, we're never going to get back there. And they think they keep getting redemptions. So now they're in a situation where they don't have cash, and it becomes a trigger effect, right? So they got to sell things that they've been defending to their investors to buy new things, but they don't have cash, and they're fighting redemptions, meaning that their investors are taking money out of their funds, so they have to sell stocks in a very illiquid market. So their performance is kind of a death spiral. It keeps getting lower and lower. And that's a good sign for me going, well, I don't know if we're at bottom or if we're past the bottom, but money is very tight. And, that to me is our advantage in how we can get the private placements with the best terms, with the best warrant coverage. So that's kind of where my thesis is. I think it's going to be a couple of years before the juniors take off. I think what you're going to see right now in the mid-tiers is major consolidation, and you're seeing it. Look what Ross Beatty's done with Equinox. You're going to start seeing the bigger companies gobble up some of these undervalued mid-tiers, and that's what I've been writing about and putting personally millions of dollars, positioning myself into what I think is going to be bought out. So before the juniors take off, the mid-tiers need to have consolidation.
You brought up some good points there, Marin, because I was going to ask you, what's the trigger? What are some things that you need to see as someone who's been in this industry for over a decade and has one of the best performances out there? And you mentioned we always want to look for those indicators, and the fact that the top fund managers are almost like throwing in the towel, capitulation, sometimes we call it, puking on Wall Street, means it's usually like a good time. But what are some of the other things that you're seeing? Because now you're seeing consolidation, as you said, which is another good point. But is there a cycle? Because I think you talked about this once before, where usually, because we're looking at gold prices actually performing pretty well off their, they hit 2016, those December lows. Gold prices have been steady going up. You mentioned something about Trump. Again, you'd think that would have been a huge, right? Because it was uncertainty, but it turns out that wasn't a big catalyst. And now you're seeing, just macro things that never happen that are usually favorable. But let's talk about other triggers that you see. Where I think you mentioned when it comes, you see royalty companies. Usually investments come in royalty companies. Maybe it's what you just said, the investments that you're seeing it from large companies into mid tiers, to when it filters down to maybe the junior miners. Because I know so many people, just like even you and I mean, that's the stocks that they love. It's like going to a casino, but they want to know when is the right time. Is there a trigger that you see out there that usually happened in the past, that could happen in the future, that you see, like an indicator?
Well, first of all, there's no shortage of money. If you look at, you mentioned the royalty companies or the streamers or the hybrids, there's private equity trying to do that model. And I think that's a sign in itself, because the returns on a lot of the streaming companies haven't met the expectors' demand because it's a crowded trade. So now that was the expectation in a bear market. Why take the risk of actually trying to take the equity risk of developing a mine, or the risk of putting something into production? Let's take a royalty on it. But because that became a crowded trade, the returns there dropped. So now you're seeing the private equity or the big pension funds trying to do direct investments into the mines. That's a telltale right there too, because they use consultants. They don't really know what they're doing, and they're trying to find that next big score. Another telltale, in my opinion, is some of these actual holding companies that are, Cobalt 27 went out to raise $100 million for just a actual holding of the physical cobalt, and now they're like, well, we're also going to do streaming. There's not that many streams in producing assets, so they're looking at doing secondary streams. But at the BMO show, they went out to raise $100 million. They raised $200 million. And you look at that going, okay, so there's a lot of money for these niche or sexy markets, whether it's lithium or cobalt, and you see that there's money on the sidelines for the streams, royalties. You see that there's a lot of capital there. But when I'm looking at it, where I'm seeing some of the world's best deposits that are not getting, in my opinion, where they could get a 50% takeover and still be cheap, that's where I'm looking at going, okay, where can I get world-class deposit where on grade level it's in the top tier, on size it's in the top tier, it's got a good jurisdiction with infrastructure. More importantly, the cost to produce this by using your own experience and your own internal numbers, is it in the lowest cost quartile? That's a world-class type of thing. So you're seeing that type of stuff, I think, is going to start consolidating, meaning take out for a premium. Then the funds are going to follow that angle, going, okay, what else is to be bought out? Because remember, the funds are always chasing returns. So they're always kind of a telltale where the money's flowing, but you got to watch where the money's going. Then you're going to see the mid-tiers consolidate, or the juniors. And then, if there is a big success in some of the exploration, remember, we haven't really had any major exploration success. We've had some hits here and there, but nothing's really made a Voisey Bay type discovery. So you always have that wild card in the game. But I think right now in the next 24 months, it's about consolidation. And you're starting to see these funds from the royalty and streamers going, hey, we're not getting the returns we need. Maybe we'll go into these top tier assets. And when they start seeing their competitor funds making better returns from these takeovers, you'll see more of that capital flow to that game. I think that's the next game to be played.
Well, Marin, you talked about sexy markets like cobalt and lithium. And this is the reason why, and we talked about this, like this is fascinating for you to come on the podcast to explain, because it's something that we really don't talk about often. It's not a sexy market, but it's actually a commodity that has performed well price-wise, right? So talk to me about copper. I mean, this is an industry that you know very well. You're a big part of Copper Mountain. You actually took me there, I want to say, with probably more than 20 renowned mining executives. Was it?
Yeah.
I mean, that was amazing how many people. I mean, there was a ton of people on the bus. We went there. It was fantastic. And, you showed us everything.
Mm-hmm. Think about that story. When we went up on the bus, remember I put up my, remember we had the speaker and the microphone on the bus, and it was kind of a cool networking event. There was about 45 people on the bus, and where I asked how many people on the bus have actually been to an operating mine. And you said to me later you couldn't believe that it was less than half a dozen of these mining executives who have sold companies, have made billions in the industry, managed billions of dollars, and they haven't been to an operating mine. You go, you couldn't believe that. And that's a real telltale symbol of what I'm trying to explain to the industry is so few people understand what it takes to actually build a mine and how complex it is. And the industry is almost backwards. Because of what happened in the late 90s, the stock exchange came in and said, okay, you need to bring in, an independent third-party report that says how much gold do you have. It's called a 43-101 standard report. In theory, it makes great sense. But here's the problem with any third-party consultants. It all depends on the consultant you're using. So everyone tries to go to one of these big firms, and everyone tries the senior guys. But Frank, let's call a spade. A lot of these senior guys are out marketing because they own the firm, so they're trying to get more business from these bigger companies, and then they hand off the work to their little trolls in their cubicles to do the grunt work. But so many of these people have never actually been involved in what it takes to build a mine, but the certification, and then they just go through it. And I've tried to stress to the industry for the last 5-6 years, so many people go through a technical report, a 400-page report, and they read every word of it. I go, you got to do it backwards. Take a list of all the names who sign off on the geology, on the engineering, on the metallurgy, on all the different aspects, and do a search on their last 10 projects. Because remember, every engineer who signs off for their specific part of the project has to put their name and their credentials there. So you can do a backtrack on every single project they've worked on and go see if there's a pattern of success or a pattern of fail. And so many of these mines have blown up and haven't been economic because these third-party engineering firms kind of didn't know what the hell they were doing. And now these companies are completely relying on these third-party, whether it's a PEA, a preliminary economic assessment, a PFS, a preliminary feasibility study, or a BFS, a bankable feasibility study, because the banks want to use a third-party report. They don't trust the management teams. But then, these management teams are depending on this third-party report that the financiers won't finance without it. But how do you know that the guys who are doing that are top tier? And if you look at a lot of the mine blowouts, you can actually go back into the feasibility study and you look at the people and you can see the flaws in the report. And that's why it's Pareto's law, Frank. Just like in anything else, you see a pattern of success, you see a pattern of failure. Stick with guys that know what they're doing, have skin in the game, have built mines before. If a guy's been successful in oil and gas, do not expect him to know what it takes to build a copper mine. Or if a guy's been very successful in open pit porphyries, copper porphyries, don't expect him to know what it takes to build a underground gold mine in the Arctic. It's very different skill sets. So you got to stick with the skill sets of the teams you go through. And I'll give you a great example. When we went up to the Copper Mountain site, everyone's like, wow, this is it's the third largest producer of the country. But for 6 years, all the big investors and fund managers like, you guys have to go and buy another mine. You got to you're a one mine company. But because the team of Jim O'Rourke and the team that he's built around him, these are guys that Jimmy's built 6 mines, operating porphyry mines. He's not going to go look for something that he doesn't understand if he knows he can build on time and on budget, just like he did with Copper Mountain, just like he did with Huckleberry. There's a reason why he's in the Canadian Hall of Fame of Mining and got the Order of British Columbia. He knows what he's doing. Then when you go and find the mine after 6 years of, meeting the criteria, people get nervous and shaky going, well, you should just pay a dividend on your one mine. Well, that's a reflection of the sentiment of the market. And you've got to stick with your management team that know what they're doing, that have their criteria, and have a big chunk of their net worth in this, because winners win. And the problem with listening to some of the fund managers in the industry, they're chasing their quarterly returns, not what's best for the shareholders in the long run. So that's a key thing that is a problem in our industry is people are depending on independent reports by third parties and how reliable, and investors must take all of this with a grain of salt and make sure you research who wrote the report. Just because it's a third-party report with a 43101, that means nothing to me. I want to see who the guys who did it, and you got to go to the site visit. Like, Frank, you see the advantage you get when you go to site. It is so critical. Then you look at the people and what is their history in building these mines? Have they done it before? Is this, do they have a pedigree to do this, or is this a learning curve? Be careful with the learning curve.
Yeah, and it's more than that, Marin, because why don't you explain, because this is something that we do. It's not just going to the sites to talk to management, but you're talking to the real people, the people you're going to go out and have a beer with that are working, that are happy, that are not happy. Talk about the importance of that, because these are the guys who are seeing everything in the trenches, and that's where I get the most information whenever I go on field trips. It's going out with workers, going to bars, hanging out, having a couple of drinks, talking to these people. That's where I seem to get the most valuable information.
Definitely. Like, when we went up to the Copper Mountain site, look, it's a major producing mine in BC, British Columbia, and Western Canada. And we're non-union. Why are we non-union? Because the management and the workers agree that, the unions are trying to push this side, but they're American unions, so Canadians are going to have to be paying into these union fees that are going to support retired American unions. It just makes no sense, and the workers understand this, that it's a safe, number one thing is Copper Mountain has a great track record of being safe for their workers. And you look at a mine, remember I pointed out to you, you can see the caliber of the management team of how neat and tidy their site is. I always state that. You look at an oil and gas patch, you can go and look at how the management team's experiences and how their rigs are run. Same thing at a copper mine or a gold mine. Secondly, you got to have that safety record. If a mine is sloppy and unsafe, the returns are sloppy also. They don't know what they're doing. So safety is directly correlated to happiness at the site and also profitability. That's a little known secret in the industry. Another thing is, how long are the people there? Are they struggling to find people, or are you seeing people build their careers internally? Upgrading their workers where they start out. That's something big that we have focused on. And under the leadership of Jim O'Rourke, you've got to promote within. That's a big thing. Secondly, then you go look at your costs and you go, okay, cost of capital in mining, because it's not right now a bull market. You got to be very careful of how you're financing these things, because there's a big debt market that could cripple the equity shareholders. Well, when you have a management team that know what they're doing, then you've got the big Japanese funds. So, for example, Jim O'Rourke's track record, he was able to bring in the Mitsubishi Materials Corp, and they became a partner. When you're really looking at the debt at 4% money on a copper mine, Jimmy basically reset the way a lot of companies were looking at doing these joint venture deals. Again, in your next project, how are you going to finance? That is a very critical key. Not only do you have to get through the exploration risk of, is this a deposit? Then you go, okay, can this deposit make money, and what's the infrastructure and the tax regime in the region and all of the realities of getting the permits and how much is this going to cost? Once you get through that, then you got to ask yourself, how are you going to fund to build this? That is an absolute key. So there's all these different aspects, and you get to know really the relationships by sitting and getting to know these management teams. And Frank, the beauty of what you and I do, there's maybe 12 management teams that you need to on in the industry. Now, there's no doubt that I might miss, one or two surprises in the industry where there's a great team that, I didn't maybe spend enough time on because they came out of nowhere, or they came out of a large company and they surprised the market. But you know what? If you do Pareto's law, the 80-20 rule, and you do it to the second derivative, if I focus on 4% of the management teams, I'll still get 64% of the gains. That's more palatable for my time frame than trying to get, I can't kiss every girl, but I just want to kiss the 4% because that returns almost 2/3 of the positive returns.
Are the 4% pretty or not the pretty girls? I lost that analogy. I forgot.
Well, we are talking about mining. That said, my wife is a geologist, so I'm going to probably get heck for that when I get home.
Well, listen, I want to talk about really quick about the underlying commodity, which is important here because, for people who are in the mining industry, you'll get this. But when we look at gold, people don't invest in gold based on supply and demand, right? They invest in it because it's a store of value. It's, that America is going to disappear one day, these crazy, alternative currency, safe haven, against inflation, whatever. Copper is a demand-driven commodity, and we are seeing like a global market that's hitting new highs. We're seeing a massive infrastructure plan about to be announced where both our sides, not to get political, said they ran on $1 trillion infrastructure plan. So something's going to get passed eventually, and you're seeing these, all the other markets around not all of them, but some of them just coming up and hitting new highs. I've read great reports, even from Goldman Sachs, and just showing how, people are really underappreciating the massive amount of demand coming in copper. I guess, do you see that demand as well? And if you do, I mean, what are some of the ways, not just Copper Mountain, but that people can make money off of this? Because it seems like, it doesn't mean we saw a goal where the underlying commodity goes higher. Stocks doesn't necessarily get higher, but it should follow suit.
Well, look, I'm very bullish right now moving forward on copper. And when you look at, the amount of depletion of his existing mines, let's take a look at where we've been in the copper market over the last 5 years. Because copper prices went, touched $2, mines really pushed the limits. They really buckled down, including Copper Mountain. And if you look across the industry, there wasn't no new major mines coming on. You look at the issues at Escondida, their impurities are going up. And that's something key to understand here. You want to invest in clean copper concentrate. So what's going on is, if you look at the high-grade mines coming out of, whether it's Chile, Peru, even some of the Congo, there's very high grade. But, people think in Congo that, because it's so high grade, it must be super cheap to produce. No, that's actually the opposite. We can produce copper cheaper in British Columbia than we can in Congo. Why? Go look at the balance sheets of all the companies. You got no infrastructure in the Congo. You got to pay, whether it's Dan Gertler or any of these middlemen, huge fees to get things. Look, there's no secret. Go look at what Glencore paid Dan, something like over $45 million to be kind of like a negotiator. Then there's missing payments to management. There's missing copper production. And now let's just say you get, look at Katanga. Great project, great, a lot of potential, but they have to restate their financials. There's a lot of issues when you go work in the frontier areas because of, the social issues, the lack of infrastructure. So that, even though Congo's got huge potential, be very careful there. There's a big misconception about, if it's high grade, it's very cheap to produce. What about power costs? There's a reason why, the porphyries, which are usually lower grade than most of the stuff you're looking at in Chile or the Congo, but you have such low power costs and it's bulk tonnage. You have big trucks. So you got 280-ton trucks. Look at the shovels we had at Copper Mountain, the world's largest hydraulic shovel, the world's largest front-end loader, and you got the second largest haul trucks in Canada running around there. So that's something key to understand. You got rule of law, but there's no major new pebbles coming online. Look how hard it is to develop and permit a big mine that the world needs. And it's not just the China or India. I'm talking about the re-electrification grid of North America. So it's not just Tesla cars. You look at any of the new houses, all these smart homes use more copper today than they did in any time previous. That's something people don't understand, is copper is crucial in the world going wireless. And ironically, the more efficient the electricity grid gets, you actually have to use more copper, not less. That's another misconception that people think. As the cars improve, they're going to become more efficient. That is true, but they have to use more copper. And that Volkswagen and Ford and GM, they are going to go electric. Maybe not all of their fleet. Maybe the projections, the world is too optimistic. But the point is that the vehicles are going electric. The houses are going smart grid. The offices and all the new infrastructure is going more efficient, which means more copper. And, there's a deficit by 2022, and we're not talking about a small deficit. It is a massive deficit. And a lot of people think that, well, can you believe the numbers? Can you believe this, that? Just look at the operating mines and look at what new mines are coming in to replace those. And the timelines don't match because they're not permitted, they're not financed, and it takes many years to build a mine. The other thing that people fail to understand on a copper project is, your copper project, you either, whether it's SXW or if you're doing concentrate, where are you sending your concentrate to? So it's crucial that you look at and going, is there an actual home to that copper, or am I getting a discount because of the dirties? I call them the nasties in the con. So you want to invest the real bull market, the copper. The king of copper is always going to be clean concentrate, because the world is going towards a dirtier con, but the big smelters are massive infrastructure costs. They can't put all dirty con through their smelters because of the temperature requirements to refine that copper has to be down blended with clean concentrate, or else their smelters can't operate. So that is where the smelters and the big money is going towards, is clean concentrate.
So, Marin, outside of copper, and we'll finish up here, what is some of the things that you're looking at, even if I like to get stock ideas, just particular ideas that you may like out there, or maybe it's a certain sector where you said, hey, cobalt, lithium is hot right now, certain things that you think could become hot, or things that you're looking at maybe outside of traditionally gold, silver, or things like that?
I've got, very big focus on, my rules. Management have to be the largest investors. You've got to look at where, the near-term catalyst. I don't want to be holding something for 10 years, hoping that in 10 years something happens. I don't like my money in hibernation. I believe what we're doing with Copper Mountain, and look, I'm a big shareholder. I've been on the board for over 10 years. What Jimmy and them are doing, it's their investments. It's their focus. You don't see them running around with 10 different deals. This is a mine builder, and his team are mine builders, and they're going to do it again. I think I give you one interesting one that I've been buying millions of dollars of that I think your investors will like, is Nebsun. And I love these types of stories because, ironically, it's in Serbia, and I spent a lot of time in Serbia, but people still think, Serbia, that's like the little brother of Russia, or isn't there a war going on there? And yet, historically, that Trepča belt of the Bor district is a world-class mining district, but no one in North America really understands it. Yet what Nevsun has with Timok, in my opinion, is world-class. And I've been writing for about 9 months that this is a takeout target. I still believe it is. It's taken 9 months for my thesis here, so it could take 6 months more, but it's cheap. And that deposit itself is worth, multiples of where it's trading at today. Plus, the company has a project in Eritrea that I've asked management to sell, but they think it's worth more just producing it. It's a producing cash flow, and they have no debt. So I like these balance sheets where, you have a significant, investor in it, or an offtake agreement, whether it's the Japanese as a major partner, or when you look at Nevsun, they have no debt on their balance sheet with a world-class asset that someone's going to buy out, whether it's a major or a large mid-tier. You can't find assets like that. That's where I'm really focused on right now.
Well, listen, that was an amazing trip. We took to Copper Mountain, I think it's in 2014, and it just brought back an amazing memory, because I know when you took the microphone and made that announcement about how many people have been to an operating mine, do you remember what happened about 30 seconds before that, or no?
No.
Because you said that, okay, we need to turn down something. It was music. Do you remember that and what was playing?
The greatest rock band you've never heard of.
I'm going to fill in everyone if they're new listeners, but Marin used to be in a rock band. He used to be a singer. And yes, it was exciting. And yes, I'm going to break out the leather bands, and it was fantastic. But it was actually good. It was really good. This is a long time ago, and you were like, guys, yeah. And it was just so funny because we listened to that the whole entire time. Which thank God it was good because you planned the trip and it was a long time, so we had no choice. But I'm glad it was actually really good.
If there's any of your listeners who are in university or in high school, I'll tell you, if you want to, everyone joins a frat to have fun, or this football team or whatever, I'll guarantee you, you will not have more fun in university than if you're in a rock band. It's a fun way to go through university, and it was some great memories doing that. So I thought it would be a real tongue-in-cheek experience that everyone could listen to my past while we drive up to the Copper Mountain Mine.
And it was cool. And Marin, there was a lot of high profile. I mean, there was, you said over 40. I knew it was over 20. I mean, it was over 40. But the people on that bus and the projects and.
Yeah, we calculated, what was it? Everyone on the bus between the executives and fund managers, if you calculated their market caps, I think we said there was over $45 billion in assets under management on that bus going to the mine site. And I couldn't believe that of the 40, I think there was 48 people because we had that big 65-seater. And then at the end of the day, remember, we had the gambling going on in the back of the bus on the way back. But I think 6 or 7 people max have visited an operating. And that tells you how, here's a great telltale signal of where we are today when you ask that question. About 10 years ago, there was about 80 mid-tier developers or producers in the copper space. Today, there's less than 10. So think about that. You've gone from 80 to less than 10. That tells you that there's a massive void, that we're far from a frothy market. We're at the opposite, right? So that tells you that there's going to be major movement in the sector, whether it's consolidation within the mid-tiers amongst themselves, or a big private equity fund taking big positions and making a play for it. But when you go from 80 near-term producers to less than 10, that's a telltale signal.
And Marin, I guess we'll leave it there. And listen, I know how busy your schedule is. We talk all the time, and you have been on the road a long time. So I appreciate you coming back. And one of the first things you did, give us an update, come on the podcast, give us some ideas. I know my listeners love you, and I really appreciate it, buddy.
All the best, Frank. Take care of yourself.
Okay, guys, like always, great stuff from Marin. Love when he comes on. We always poke fun, have fun. He's a good friend, great analyst, doing great on just with Katusa Research. Probably great research for subscribers, and we're probably gonna be doing a lot of things together and stuff because a lot of cross marketing opportunities. But I attend all of his conference. We see each other and get updates, and he's been a big help for me in the mining industry. I mean, now I can walk into these conferences and I have the top CEOs and stuff like that, and I like to say, you know who I am? That's why I get this. But a lot has to do with just knowing the right people in this industry, being respectful, being in the room, going to like the trip that he said, that's one of probably 10 trips we've been on, Boeing plant. I mean, we've been so many different places. Data mining facility. It's really cool when you just put yourself out there and you focus, and they start respecting you. They see your write-ups. They start getting familiar with you, and a lot of that is from Marin. A lot of people I've been following the industry, Jeff Phillips, the Rick Rules and stuff, and I'm always thankful for that. And plus, it gives me an edge because a lot of people don't have that kind of access and know what's going on, and know the real inside stories of what's going on, and getting involved in these stocks really early. So. I always thank him for that, and we've helped each other a lot over the years. He's a good friend, and he's a great analyst. So hopefully you enjoyed that interview. This podcast is about you, though, not about me. So let me know what you thought. Frank@CurzioResearch.com. That's Frank@CurzioResearch.com. Now, let's get to my educational segment. I try not to bore you, but this is what's going on with the market, which is boring me. Because I started doing a little homework on this tariff thing. It's kind of funny because if you watch the news, read the newspapers, you either hate Trump because of the tariffs, think he's an idiot, or you're actually really in love with him, right? Because he's, maybe you're a Republican, and no matter what he does, you're going to like him. Doesn't matter. And depending on which story you read, actually about 95% of the stories I read, and I read over 100 over the past few weeks, because these tariffs are going to have a big impact on specific stocks, industries, everything. But they highlight how terrible these tariffs are. It's horrible. And how after 100 years of globalization and falling trade barriers, just countries all over the world, including ours, are going to suffer greatly, right? Free trade is not going to exist anymore. This is what I'm reading, right? I'm not putting anybody. This is what I'm actually reading. Now, I want to give you a quick history lesson here. It's important. As an investor, you need to understand this. Because when you look at the history of global trade, it dates back for over 100 years. Now, during that period, it nearly stopped. It kind of stopped after the Great Depression, right? Everybody got killed. Everyone know the Great Depression. I won't go over the details. Economies got crushed, unemployment surge, massive recession, which is called depression, and everything was just terrible. So what did countries do, right? They didn't really know what to do. It was new. It was terrible, right? I mean, it was crazy. They started to raise taxes on imports, right? Just tariffs to protect their home industries. That's what they thought would work. So they thought, all right, let's use this protectionism, right? It's going to be better for us. And international trade in the 1930s suddenly became non-existent. You have some historians argue, well, this led to military dictatorships in Germany, Italy, Japan. They wanted to restore wealth and growth to their economies. They built up their militaries to conquer countries that were rich in raw materials. I mean, you could argue that. It's a good argument. And this led to what? World War II. Germany invaded Poland in 1939. We all know what happened then. I won't, go into the World War II thing. But the end cost was over $1 trillion back then, which amounts to probably $12 to $13 trillion today. And that was that. Now we have the conclusion of World War II. 23 countries came together to create the first worldwide free trade agreement. And it was led by the United States, Canada, United Kingdom. So they called it the General Agreement on Tariffs and Trade, right? GATT, it was called. So the goal was twofold. To ensure long-term peace among these nations, right? Free trade and trading with them, you're talking to them a lot, makes sense. And to prevent another devastating plunge in global trade, which happened after the Depression. So it's interesting when you think of that, right? Kind of accomplished a little bit of that, those goals. GATT was refined over decades and eventually led to the creation of the World Trade Organization, the WTO, which you hear today. Just give you a little history here, which allows roughly 160 countries now to sell goods outside of their borders, which what? Stimulates economic growth, provides stability, and helps countries avoid conflict. Again, says the WTO. And then we also have another agreement, it might be confusing. It's called NAFTA, North American Free Trade Agreement. This agreement is between the United States, Canada, Mexico, which was signed in 1994 under the Clinton administration. And this agreement will lead to the phase out of tariffs on agriculture, textiles, automobiles, all these sectors. History lesson over. Just want to get you guys on the same page. I don't think anyone's going to deny global trade is a great thing. It's tons of positives. Since every country is going to see a massive increase in trade, going to create new jobs in the U.S. I mean, this is how these deals were pitched, right? When they were put before it was signed. And we're going to see an incredible increase in economic growth. But let's take a closer look at the WTO for a minute. Because in the WTO, not NAFTA, but WTO, there's, NAFTA as well, but there's a special provision that allows the current president of the United States to impose tariffs on exports. So it's called Section 232. And according to this provision, which is actually called an escape clause, they said, here's an escape clause. Whenever you see that, it's kind of like a red flag. Escape clause. But it says if cheaper imports result in lower unemployment and a decrease in government revenue, the importing country can impose high tariffs on those products. Now, specifically in the U.S., the president can impose these tariffs by himself. He doesn't need the approval of Congress, which he's doing right now. He doesn't care what the Republicans think. He doesn't care what anybody thinks. This is what he's doing now. Why? Now, this is the part I think people have failed to understand. And this is, maybe I shouldn't say people, maybe some people do, but when I'm reading these stories, it's insane what I'm reading. Because there's a big reason why this clause is put in place. And it may change your mind on how you view these tariffs, since probably 9 of the top 10 people that I talk to think this is a horrible move. What we're doing, tariffs are terrible. Presidents and idiots, no clue. For example, let's say you have a company in the U.S. and you make this part for an engine, you sell it for $100, and it's awesome. Business is great, it's awesome. But China happens to just basically copy this, and there's no laws in China, whatever, piracy and everything. They copy it now. They build that part for a lot less, and they're exporting the same thing to the U.S. for $70. What do you think all the customers are going to do? So our president has the right to place tariffs on this specific part to where, hey, maybe it'll be around the same price if this part was made in the U.S. So if we don't place these tariffs on China, what happens? Then every company or your company that makes the part is going to go out of business. Thousands, maybe hundreds of thousands of jobs will be lost, as entire industries could be destroyed. Now you may say, hey, Curzio, hey, buddy, that's called capitalism. Competition leads to lower prices. Lower prices is going to lead to more savings for consumers. And you know what? I couldn't argue with you. I think you're right. I believe in capitalism. I'm 100% on board with that. Based on the reporting out there, you would think this is the case. Like, what's America doing? This is crazy. Trump is an idiot, placing tariffs on certain imports. It's going to stop global trade, which will lead to higher prices for goods, which could result in massive inflation, which could result in riots in major cities. We're all going to be sleeping on park benches. Trump's a complete idiot. It's the end of America as we know it. And that's what's being reported right now. That's what I'm reading. I read a lot of stories. I guarantee I read a lot more stories than a lot of people in this podcast. I just got fascinated with everything that's going on. I want to learn more. Now, I want you to do me a favor. And this is going to be the most difficult thing ever for you, ever. I want you to forget that you're a Republican or a Democrat. You only have to do it for 5 minutes, I promise, and you can go back to being the way you are. Pretend Ross Perot is the president. I mean, I think that's the most neutral person I could think of right now that most people don't hate. Perot actually got 20% of the vote when he ran as a third-party candidate. I mean, he had some Bill Clinton won, and then he's going against Bush Sr., who was he was president race. So that was his second term that he lost. But Perot, if you're a millennial, pretend Bernie Sanders is a president issuing these tariffs, to get a millennial level, since I know you love that guy, since he wanted to give you free college, free homes, free furniture, free cars. I mean, if I was a millennial, I'd vote for Bernie Sanders twice. So I want to try to get everyone on the same page. So seriously, pretend there is no president of the United States for a minute and focus on this as an investor or someone who has common sense. China makes some of the cheapest steel in the world. They can produce the stuff like crazy. And when they don't need it domestically, which is what? For cars, buildings, bridges, they will never, ever, ever stop producing it because they know they can dump it in tons of other countries, including America, and undercut every producer. Why is this a big deal? Not sure if you know this, but our steel production facilities are operating at around 75% capacity right now. 100% would be great. That's full demand, 75%. But if you look at some of the individual companies, Timken Steel, they're running at less than 50%. Think about that. This is going to go lower and lower and lower as China continues dumping steel on the market to the point where we may no longer have any steel producers in America. And why, if you get cheap steel from someplace, why would you pay more for it just because it's made in America? It's a business. Maybe you want to go out of business, that's fine. But if you're a real businessman, that's not going to happen. And you may be okay with that and say, hey, that's again, capitalism, that's what happens, global. That's fine. But we need steel. We need our own steel to build our cars, our buildings. I mean, when we give the power of that to one country or one area. Look at OPEC. Look what they have done to oil prices before the steel revolution in America came. Look how much oil, with the largest consumer oil in the world, and we're dependent on OPEC of how much they're going to cut, increase, what are they going to do, the politics behind it. I mean, we're at their mercy at one point when it comes to oil. It can become very, very, very dangerous, especially when it comes to commodities. Now, what happened? Well, we discovered shale technology, horizontal drilling, fracking. Big deal. Just a lot more control, not control the world type thing, but not dependent on pretty much the biggest commodity in the world that runs our entire United States. Think of Kazakhstan with uranium, control 40% of the market. People really don't know that because uranium is not a big deal, but we're the largest consumer of uranium because we don't produce it. What happens if uranium really becomes, everybody finally realize that, uranium is pretty good. It's cheap, it's clean, and you know what? I have a feeling that we're not going to see, any freaking Japan tsunamis or whatever. If we could prevent it, if it's just, that scares enough to say we don't even want this here, but it's really one of the greatest forms of energy ever. Look at one country producing more than 40% of it. In order to build anything on the steel front, we need to call China and practically beg them for steel, if that happened. Now, let's think even bigger here and apply this to a lot of industries like aluminum, solar, and now technology, which we're talking about. And people are complaining recently, right? Tech stocks got killed, make a little bit of comeback today, of how tech was one of the biggest growth industries of the past few decades because of free trade. What are you guys doing? This is where we are in technology. It's amazing. But again, put aside your political beliefs for just a minute. Because remember, there's no president of the United States just right now for 5 minutes. And I want to give you some interesting facts. When it comes to China, they have some of the most restrictive inbound foreign direct investment policies in the world. You don't think so? If you're a U.S. manufacturer, try opening up a manufacturing plant in China. If you're an oil driller, see what happens when you try to get permits from the government to drill. Good luck. Extremely difficult process. They've been easing it over the past couple of years and reporting, while we're seeing record investment, foreign direct investment, right? FDI is this. If you push an FDI, that's what it comes up. So it's foreign direct investment. And it's a record because it was horrible, and now it's getting less horrible. But still, it's very difficult as they close their borders for a lot of people. And what's going on here? They've quietly become not just like a blip on the radar, but the global leader in a lot of high-tech industries. We're looking at 5G. They're by far killing everybody. New energy vehicles, integrated circuits. You look at the aircraft engines. I'm doing a lot of research on this. And that's real interesting since according to the IP Commission report, China is responsible for causing close to $600 billion in loss every year to the U.S. economy. You know why? Patent right infringement. Interesting. Now you look at our deficits. Our current deficit with China is what? $375 billion. Let's think outside of China, right? Our deficit with Japan is $200 billion, followed by Germany with $170 billion. Isn't it kind of interesting the two places who are pissed off the most at us about these tariffs have threatened to retaliate? We're going to wait till you see what we do. Are the European Union and China. European Union has a $385 billion surplus, and China has a $160 billion surplus. I'd be pissed, and I make a big deal about it if I was them too. Well, the U.S., we have a trade deficit of $460 billion. What does that mean? $460 billion. Let's put that number in perspective because by far it's the highest deficit in the world. Our deficit is almost the same size as the combined deficits of every other country on our planet. So if you take the combined deficits of every other country, it's just slightly bigger than ours by itself. It's pretty insane when you think about it. Let me go with NAFTA. It's supposed to be a fantastic deal. We were told, this is what we were sold on this, right? 20-something years ago. It's going to create 200,000 jobs in the U.S. within 2 years. Then after 5 years, we're going to add 1 million jobs. As economic growth in America is going to soar. This is them talking, not me. We don't see a massive increase in U.S. exports to Mexico since there's going to no longer be tariffs. My buddy Warner Wolf used to say, let's go to the videotape. We did not add 1 million jobs. In fact, we lost hundreds of thousands of jobs, and manufacturing plants moved operations to Mexico. You don't think so? Talk to anyone who lives in Detroit. You'll see. Talk to them. Manufacturing jobs in upstate New York were lost. If you look at appliance, computers, textile jobs in California and Texas, a ton of these jobs were lost. And it made sense. You made it easy for these guys to pick up and go to Mexico. It was easy for them. U.S. wages became suppressed. This is the data doing the talking, guys. Not opinion. And why did that happen? Because you're a manufacturing company. What are you going to do? You have 10, 20,000 employees. All you have to say is, we're probably going to move to Mexico. And there's a stat on this that 80% of manufacturing companies in America actually threaten their workers with this. Why would they do that? Because if they go to Mexico, you don't have a job anymore. And what does that force them to do? It forces them to join the unions. Because they want that protection. But you know what? Because they joined the unions under stress, that gave them almost no bargaining power, which led to much lower wages. And we have NAFTA added around $80 billion in total GDP, in total, not a year, total. That's according to the Council on Foreign Relations. So we're talking a few billion of dollars each year sold on a policy that's supposed to be amazing, add jobs, great, and forget about what it's done to Mexico and agriculture and farmers. Holy cow, you think we're bad? Crushed them. They were getting all that stuff subsidized. Those came off, and we started producing corn for cheaper than ever. I mean, you're talking about millions of jobs on their end that got lost. I mean, we were the one that this deal didn't make sense to. You look at non-college educated workers. I mean, forget about those wages. I mean, workers from Mexico are allowed to come here, right? And they work for much lower wages. I'm not talking about immigration or anything. And our trade deficit with Canada and Mexico has grown to $89 billion today. I mean, that's combined. So before criticizing anyone or having the same opinion as the biased person who, wrote the story you just read, Before changing your allocations or saying, I'm going to dump Harley-Davidson stock and every large cap technology stock, because they import their parts from other countries, and now we're going to see massive tariffs, right, in retaliation from these countries. So before you do all that stuff, just know that every other country would be absolutely insane to do that and to mess with us. If they increase tariffs, most of these countries would fall into recession within a year. They would see massive amounts of business being lost. And most of those countries, right, who've seen their economy strengthen the past 12 to 24 months are still on very shaky ground. I mean, it's kind of like their cycle right now is not like ours. We're a lot early to this. Stimulus, all this stuff. I mean, their market is kind of like our market in 2011. It was a nice comeback, but still a lot of work to do in terms of job creation, GDP growth, earnings growth, growth in manufacturing. We've seen a lot after 2011. 2011, we were still on shaky ground. The market was coming higher, yeah, but there was still a lot of cracks in the foundation. That's where they are, and they're going to be crazy to do something like that. And by the way, if you're worried about paying higher prices because of these tariffs being an initiative, just a quick fact. If tariffs on washing machines, solar panels, steel products, and aluminum products are applied, that represents less than 2% of all U.S. imports. 2%, less than 2%. You would think the world's going to end by the stories we're reading. So you have to look at this as the tariffs are a message, and it's working. Make it fair. If it's horrible and you think global trade is, that's it, it's over, we could reverse them. We could take them off. It's fine. But it's working. If you don't think so, look at China's steel exports. Since Trump got elected in November, they're down considerably. Why? Because Trump campaigned on stopping China from dumping cheap steel on markets. They're anticipating this was going to come out. I'm sure these tariffs won't be in place for long. You know why? Because countries are going to have to work with us. They have no choice. They've been taking advantage of us. If you look at the numbers and you look at the data, I mean, before you read the story, before you have this opinion, all this, could it be handled better? Yes. But again, the president right now, we're still under no president law and no politics involved. But if you look at what some of these countries have done, and China stealing our technology, and come on, and using it for their benefit, being able to create products, because it's basically, you can do anything you want almost there nowadays. I mean, it's really, really insane. So how do you play this? Well, if you're a trader, short technology, it's going to be in the news a lot. A lot of these stocks are going to fall the next month or so. People worry about global trade. It's going to destroy technology. We really don't know the biggest impact because free trade has been so great for us. But I look to cover pretty quickly, as most countries are not going to place tariffs on our exports unless they want to destroy their economy. I mean, they want to try to play hardball. Good luck. But they'd be crazy and insane to do this. So while you see these numbers and these tariffs, it's not that big of a deal. It's a message saying, hey, you know what? We got to strengthen this. We got to make sure that we keep jobs in America. It's not that we don't want global trade at all. That's the way I see this. Could it have been handled differently? Yeah, I don't think it really needed to place these tariffs. I think you could have made it, just keep that statement in place that this is going to happen and meet with them. Yeah, of course. But if you put your politics aside and everything, for me, this is a non-event. It really is. It's not going to lead to no more free trade ever and NAFTA and all this garbage, but we're in a position of strength, being the largest consumer in the world, which means we should have the most jobs, the most everything. So let's go back to being that, and let's not let people just take advantage of us, which a lot of countries are doing because there's been no accountability. Because in Washington, look, getting back to politics, speaking freely here, Trump is not the smartest guy in a lot of things. But he's really smart when it comes to the tax reform. I don't care who you are. I mean, even the Democrats can't even say anything about it. Amazing what we're seeing. That's what he does. Just like every president has something that he's really good at, and he's usually horrible at a lot of things throughout history, from my experience. Again, I wouldn't have handled this situation, but this is what he builds businesses, numbers, get jobs. It's what he's done all his life. He came out and said, I avoid taxes because the tax laws are ridiculous, and I know how to do it. I could change that. I wouldn't favor anything else, but for this, let's see how this plays out, because if it's really bad, we can again take tariffs off. But this is more of a message as I dig through the numbers, but don't think, hey, it's some guy with his eyes closed just doing stupid things and making this happen. There's a reason, a big reason. And when you look underneath and you look at those numbers, man, you know why this is taking place. And it is going to add jobs. It already added jobs with tax reforms and stuff like that. And Apple, $350 billion they're going to spend here. You've seen AT&T, Comcast give their employees $1,000 checks. Again, putting the politics aside, when you're looking at the facts, it's probably he could have handled it much better. You don't want to get to this too aggressive, and I agree with it. But I see why this is happening. A lot of presidents have had talked about doing this. They never did it, and it's always talk. Making this statement, I don't know if it's a good thing or a bad thing yet. It's too early to judge, but don't worry about your stock positions. It's more of a trading opportunity. Don't worry about, Harley-Davidson stock, and they're going to pay much higher prices. When you look at the scheme of things, it results in very, very little, and the EU and China would be absolutely nuts to increase tariffs on us, absolutely nuts, because their economies would really go into recession probably within 12 months. So it's probably not going to happen. Now, you can go back to loving or hating President Trump and go back to watching CNN or Fox over the next couple of weeks. Be entertained. As for me, I'm going to be watching March Madness. Let's go, KU. Okay, guys, you have any comments, questions? Need someone to yell out after that segment? Get your frustrations? Email me, frankcurzioresearch.com. That's frankcurzioresearch.com. But thanks so much for listening. Enjoy March Madness. Have fun. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.